answering your money questions. Go to yourmoneywealth.com, click on that button, ask Joe and Al, like what, Ken, I think, is that who's calling in?
Yep, we got Ken.
Hi, Joe, Al, and Andy. Thank you for taking my question today. My name is Ken. I live in beautiful Southern California, and I am calling on behalf of my wife and I. I drive a Toyota Camry. My wife drives a Lexus SUV. She doesn't drink, but I enjoy a cold beer in the summer months and a nice glass of wine or a gin and tonic in the winter. We have a question, a spitball question on what you would call distributions, tax efficient distributions during retirement. We are overfunded in IRA and 401ks. We're 57, both of us are 57, and plan to retire in about 3 years. At that time, we thought that we would do Roth conversions of about $300,000 a year and live on what we have as far as muni bond interest, rental income, and some regular interest and qualified dividends. We believe we can live on that comfortably. If we can't, then maybe we take something out of a brokerage or a little bit out of the conversion. But our plan was to do that up until RMD age. We understand that IRMAAs are going to be expensive. We're not worried about that. However, we do want to draw down these pre-tax retirement accounts by the time we get to RMD age. My thought on this would be is if we convert these to Roth and pay with our brokerage accounts, that would be the way to do it. Right now we have some tax loss harvesting at about $100,000. So our plan was to sell some of our stock, not pay capital gains because of that tax loss harvesting, and do that for a year or two, and then go and take money out or sell stocks from the brokerage account and pay for the taxes on the Roth conversion that way. On the tax basis, we have quite a bit of basis in that brokerage, so we don't believe we will have a big tax hit for the capital gains because there's a lot of basis in tax loss harvesting there. We plan to do that until about 75, where these muni bonds will mature, and then we get into RMDs. Does that sound like a plausible plan to you? Looking forward to your response. Thank you.
Yeah, a lot of words, not a lot of substance here. They must have a ton of cash.
I'm guessing if you can live off of muni interest and rental income and dividends,
so
and doing a $300,000 conversion, which is going to cost some money to pay the tax.
So I think really the strategy's fine. He's going to pay but I don't know. Is it 300,000 or should it be a lot more than that? A lot less than that? We need to understand how much is in the account.
Right. Here's what we don't know. We don't know your account balances. We don't know what your spending is. I'm not sure if you told us your age. We don't know a lot of particulars to really help us decide whether this is a good strategy. I will say one thing though, right off the bat, with what we do know, is you don't necessarily need to convert 100% of your dollars out of your IRA 401k in higher brackets just to be in a 0% bracket in retirement, right? You'd kind of like to do it so you're converting in lower brackets now to keep you in lower brackets later instead of paying more tax than you need to. So maybe think about that, but without knowing the numbers, it's kind of hard to say.
Yeah, no clue. Convert 300,000. But congratulations. I mean, I think it sounds plausible. It's like you have outside monies. He's done some tax loss harvesting. A lot of buzzwords there.
Yeah, right.
Well, muni interest, tax loss harvesting, basis, conversions. He's been listening for a while.
Or at least somebody. Somebody.
So if you're not going to pay tax on the brokerage account, you're going to live off the brokerage account plus some muni interest plus whatever real estate income that you have. You've done tax loss harvesting along the way, so when you sell the stocks, you're not going to pay tax on that.
Yeah, and the real estate will be sheltered with depreciation probably. So it's a great strategy to have almost no income. You do your conversions and you stay in lower brackets.
So if you stay in the 24% tax bracket, or are you going to stay in a higher bracket? I would not touch the Roth money to live off of. I would just convert less. So that's the only thing that he said there that I would probably pause upon. Okay, cool. Thanks for the question.